Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about a marquee stock, DMART, and where the stock is headed in the next 2-3 years. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about DMART, here's a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions in greater detail. And once you get the $10 membership, you will have access to my portfolio, my watch list, and also a number of podcasts that I put up there from time to time on different stocks and markets. For detailed company analysis on number of stocks you are having, you can directly email me and we can work things out. The billing cycle for this $10 membership begins on the 1st of every month and ends on the 31st of every month. Now about DMART, formally established in 2000, it focuses on providing consumer products in a retail space, and we all know about it how Walmart or Target works globally. Although DMART is not quite a Walmart or a Target, but it is reminiscent to it and has very good profitability and return ratios when you look at the company as a whole. Leader in organized retail business in particular spaces, have multiple retail malls, especially in South India, and it's backed by market guru Radhakrishnan Damani. If you look at the financials, and this quarter has been abysmal. I mean, the June quarter sales fell by around 33%, and they have come out with a profit of 40 crores rather than any losses, and that is commendable. But the profit fell by around 70%. Absolutely no debt, and normally companies in this space have leasing and other kind of things that goes around, but here they don't lease spaces, they have their own spaces, and that is the best part. So no debt with them at all. Return on equity of 19% and operating profit margin of around 9% currently, but the ROE has dropped because of these numbers that we are seeing. Otherwise they do 25-30% ROE. So why the euphoria of the stock? And I'm going to talk about the Reliance thing also in this section, because then I'll talk about technicals and what to do in the stock. So I'll talk about Reliance also here. So kindly watch the full video. The euphoria is because there is moat and leadership in the space. So what DMART does is sell the products at very reasonable prices to middle to low income group people, relatively lower middle class people who buy a lot from these spaces, especially in places like Maharashtra and Bangalore, that is Karnataka, and other southern states, and has not expanded vehemently like the Future Group did. And look at what has happened with the Future Group thing. So they are doing well in the niche places that they are working, and the leadership is there with the kind of profitability growth that they are showing. They're showing a profitability growth of 40 to 45% over the last 8-10 years, and that is why the stock is trading at between 120 to 150 p, rather than trading at say 50-60 p or half of that. Owning their own stores is also a very very big positive, because they don't have to pay leases or pay any rent. They have their own store. If they close it down, there's only the fixed cost, that is one time cost that has run up. There's no extra cost that they are having. They don't say in this pandemic many of the retail companies have to pay rent, even if it is shut down, whether it is a small rent or 50% slashed from it, but they would have to pay rent. DMART doesn't have to do that. Return ratios are strong. Management is top class. There is no doubt about the management, and that also adds to the PE that the market gives this company. Business has a strong longevity to it. The longevity of the business is, we are all aware of it. It can go up to 8, 10, 15 years, and you can hold on to it. And quality is always selling at a premium. So you have companies in this league selling at 80, 90, 70 p, some even 100, p, and that is why the PE ratio is high. I believe it is extremely high and could reduce sometime, but at this point of time it doesn't look like that way. Now Reliance coming into this business is extremely interesting, and people are believing that because Reliance is coming into it big time with online and everything else, so DMart might not do that well, or the PE will shrink. I believe DMART can also tie up with other companies, other technology companies, and do the same thing. Not at the same, you can say, level or extent, but still they are not expanded all over India. So I don't see any stores of DMART here in my city. I don't see many stores in the NCR region, although they have opened a couple of stores. But in southern, they are southern and western parts, and they are looking. So what I have learned from what the business model of DMart is, they don't look to just expand everywhere and then try to get the market share. They try to consolidate their place wherever they are working with. So I think they will have a foothold with the spaces that they are working with there. Yes, there could be some sort of trepidation, some sort of decline in margins a little bit, but I think they'll gain margin with other stores and bringing up more stores. So remember that DMart was not able to bring up any store between April and June, probably very low. I think 4 or 5 stores they opened up, although their target was around 15 to 20 stores. So they will come up with a number of stores in this September quarter, and that is going to add up to the revenue and the profitability in the Diwali season. So there is no doubt for me that in the next 2 to 3 years, this can be still very big from these levels. Yes, over a 8-10 year period, one can argue that Reliance may have an effect, and we will come to know about it in the next couple of years or 3 years time. So it is not to say that immediately DMart would go to 1,000 rupees or 1,200 rupees just because Reliance has come into this space of retail. It reached a 52-week high of 2550 and have corrected appreciably from there. So in February March it fell to something like 16 1700, 1750 1700, but it made a consistent bottom at around 1950 level. So 1950 was the low that it made, and has consistently gone up from those levels. So the major breakout is expected above 2450. Currently the stock is trading at around 2350 as I make this video. So it has consistently moved up. I'm seeing a support at 2000, although people were talking of it going to 1200, 1300. So these stocks should be bought on major declines, and those were the depressing period. So what I realized was, and I'm invested in the stock, what I realized at 2000 is that there was no selling coming in, although the market was falling, and although there was a lot of negativity with respect to retail stores and not opening up, and then this shutdown and everything, and people will go to the stores or not, but the stock was not falling, and that is the reason I got into it. And currently the stock is above 2300, and it has been just about a month or just about 20-25 trading sessions. I think it will show much better results in the September quarter, and from FY22 onwards I see a surge in numbers, because the number of stores will be much more, and there will be pent up demand of people going to these retail stores and buying, and even going out for shopping will become a leisure activity, because of the kind of you can say because of the fact that people have been at home for many weeks and trying to save themselves. So going towards FY22, I see huge numbers coming in, and any 5-10% dip in the stock and any decline in the stock, one can buy into it. I see 3000 3300 by mid 21. So I see 3000 to 3300 levels in less than a year time, maybe by May June 2021, and I won't be surprised if the stock doubles from here by FY23. So in less than 3 years time, probably 2.5 years or so, I see the stock go beyond 5,000, 4,800 to 5,000. If everything goes well, if things really normalize, and I'm sure the numbers would be much better going forward. The numbers would continue to surge because opening up of stores continue. So what needs to be done? I would say buy close to levels of 2200. Any decline towards 2200, one needs to buy at it. If you look at the charts very carefully, this breakout from 2180 2200 is a big one, and I see the stock only stopping around 3000 3200. It is a market leader. There is no doubt about this. The management is good. There is no you can say attention of having lower circuits on the stock, etc. Look for massive falls to accumulate. If you're lucky, whatever is happening in the US markets, there could be 2 3 more down days, and the stock you may get around 2200 2250. Get into it. It is very difficult to trade such stock. You have to be an investor over 1 to 3 years. I can tell you my story. I bought into it at 680, sold at 900,000, bought again at 1200, sold at 18 1900. So that's how it goes. Waited 1.5 to 2 years in all these trades. So both the trades I waited 1.5 years. It is not like you make money through trading in such stocks. May just easily double from here in the next 2.5 3 years, even from 23 2400. So this was my video on DMART. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.